Hi everyone, this is Dennis from PipsMatter. I'd like to welcome you to our very first analysis video, and it's going to be a very quick one, not because it's the first, just because the analysis hasn't been implemented or finished. Actually, it hasn't been finished fully yet, but I'm excited about this trade, so I'd like to share it with you real quick. We're looking at gold versus the dollar. Right now we're looking at the daily chart, and once you attended some of our courses, and if you have already, then you understand what we're doing. But I'm just going to quickly brief you up on the moving averages. We're going to start with the smallest and go to the highest. And I'm putting the numbers of each moving average below the moving average. 20 represents white, 20 days. That's why we're only staying on the daily chart. 55 days represents the red. 370 days represents basically the light purple, and 987 represents the big purple, the big boy here. Now, recently in 2012, we had a change in the moving averages. Forget about the two little guys. Let's look at the two big guys. We've had a change in these moving averages, and that caused gold to have a very strong correction, going all the way from the peak of the 1900s back down to the 1000 level, even almost at it. Now, what I'm trying to show you here is this. We've come and we've tested this level already a few times. Okay, so we can say that this could be a double top. Okay, maybe it is. But what I want you to do is focus on this box that I'm going to remove and re-add. So this box over here, you see the moving averages, our EMAs are pretty much intact, and they're waiting to either go up, and that's pretty close, because if our 20, our lowest and our highest moving averages cross, you're going to see something interesting. And here's that something interesting that I want to show you. The last time they two crossed was right here, and that's in 2012, I think, 2013, early to mid 2013, right there. That's when they crossed, and since then there's been very strong movement downwards, obviously supported by our mathematical points of interest, but we'll forget about those for now. I just wanted to focus on the moving averages, and as you can see, we are close to crossing upwards. So if the first ones cross, I can easily say that price could go all the way up here, which is about 7,000 pips from where we are now. Easier said than grabbed, but we'll explain in our workshops how to take advantage of these kinds of moves, how to compound them, and how not to get stopped out from this, the ups and the downs. So if the 20 crosses the 987, obviously the 55 will widen out a little bit, just like here, but this one's going to start following. And what we want essentially is a scenario like this. Now what we're looking at is a box within a box. This is what we're looking at, and I'm going to make this one dotted, so you can understand that. Sorry, that's my pug. It's a baby, and it's trying to support me in what I'm doing here. So purple under, red on high. Okay, purple under, red higher, and we have that over here, but that's a very long time ago, and this data can be very supported. But purple under, red higher, red and white basically higher, and that's when we have an uptrend. Right now we have that, and it happened here. We have a crossover here, and that was thousands of pips away. Yeah, and then we had another cross, and that's basically a re-entry over here for a movement higher. So all in all, I can see gold heading higher. I'm not going to go into much detail on this. We're just saying that gold could head higher. I'm going to move the mathematical points out of here so we can see more of this. But I also want to tell you, just like our rules state, that we should also be ready for movement downwards. So basically, what I'm trying to say here is be just as ready to buy long as you are to sell short. our objective needs to be to trade with the trend, and we need to forget about how we feel or pretty much what we want to happen. The market doesn't care about what we want. The market obviously is going to go where it wants to go. Now, our main goal should be to stay with the trend. Now, quickly before I go into anything else, I'm going to go to AUDUSD, another daily chart over here, and I'm going to just add, just a second, let me just save this over here. Okay, I'm going to add this with our moving averages, and we have a cross. Okay, we have 1, 2, and these are just about to cross. The last time they crossed was right about here, and then here, and then all the way up here. So you can see clearly pretty big moves. You see, even after it crossed, you could have grabbed a couple of 100 pips. Over here, you could have grabbed decent stuff, you know, anywhere from 200 to 500, depending on how good you are at entering and exiting positions. And right now, we're about to cross over here. That doesn't mean anything. Perhaps price will shoot up, but it does look like it. It does look like it will continue going down. That's why we gave out the sell signal before. So that's it for now. That's all I'm giving you. Wait for the analysis. It's coming soon. I wish you all the best. Let's rock and roll.